And that means we are live here on YouTube, Tackle Trading's halftime report. After a long weekend, we are back, 3-day weekend. I enjoyed it. A lot of downtime and TLC, tender loving care, is that right? Or R&R, what's the best acronym here, Matt? We relax.
Well, I don't think it's TLC when it comes to that. I think it's a little rest and relax, right?
R&R, that's
That
right.
reminded me of the podcast yesterday, by the way, during when Mark was explaining that one show, and you're like, "Yeah, party on, Garth."
I said that on purpose.
No,
I
you did not. No, you
100%.
did
I
not.
swear
No,
on
you
my
did not.
kids, I did say that on
Tim,
purpose.
listen.
I can listen to it. I even then hesitated on purpose so you guys would react to it.
No. You said,
All my
wait.
words, then you know.
We'll
You
let
believe it
the
or you
listeners
cannot.
choose. We'll
But
let
it
the
is
listeners choose.
whatever it is.
We'll let the listeners choose, but it was pretty obvious after you said it. You like literally hesitated and said, wait. And then Mark just pounced.
No, that was all intentional as well. You can believe whatever you want.
We will let the listeners decide on this one.
Yep. S&P 500 was down here this morning, kind of a doji day. Interesting price action after the cash open, Matt. We've been neutral for a while. It came down, found the 20-period moving average. You're above the 200, below the 50, right at the 20. It's kind of the nature of the market, Matt. Mixed signals, mixed news. Not real great fundamental news in the market. I went through a bunch of the data points I'm going to talk about here during the show at some point. What's your read on the chart here? Let's
just take a look at that before we get into the economics of today, because we did get some pretty, I don't want to see nasty economic news, but we didn't get very good economic news. But I don't think that's why the market's down here today. We did get some negative news coming out of the trade war, over the course of the last couple of days. China and the U.S. both kind of establishing some parameters and, not showing their cards. And we don't know if they're going to get a meeting in September face-to-face, because the news basically was that both sides don't trust each other right now. And so that was the news. And then obviously we need to talk about the PMI numbers that came out across the world. We saw contraction in the US, we saw contraction in Great Britain, we saw contraction in China. So we're seeing the PMI numbers start to contract, and that's a very big recessionary indicator as well, Tim. But again, I don't even think that was it. I think we're stuck in a range right now. Yeah. And when the market is sitting at this resistance point, and I talked about it last week, and I actually talked about it in the pod the last 2 weeks as well, that for the market to sustain something of a prolonged bullish trend, not bearish trend, right? That's different. But for the market to sustain some type of bullish uptrend, you're going to need some type of catalyst here. And you didn't get that. And a catalyst is not, I hope the trade deal comes apart. I think the market's wising up to the nonsense of the boondoggling of the market and basically saying, oh, we have a trade deal, we're going to talk. We're not have a trade deal, we're not going to talk. I think the market's wising up to that. They're getting a little sick of that.
That being said, if you did have a clear deal come out and they came out and said, listen, we're going to cut the
that's the catalyst, though.
The market would rally like crazy.
No, that's the catalyst. Okay, so you have two potential catalysts here, and they're not economically, by the way. The U.S. economy is slowing down, and we've seen that in the economic data across the board. The world market is slowing down. We've seen that in the economic data across the board around the world. So that's not going to be it. It's not going to be positive economics. And I honestly don't believe it's going to be Fed policy either. I just don't believe that's going to create a sustained bullish uptrend unless the Fed does something crazy like another edition of quantitative easing at the top of the market, which would drive the market up, but would give me great concern for future generations in the US. So I don't think that's it either. The only two things that I really see that could create some type of sustained growth here is, number one, a conclusion to the trade war. Okay. I don't believe that's going to happen unless Trump capitulates coming into the 2020 election. Number two is some degree of infrastructure deal that we've been talking about for seemingly years now, and something that, I would support even at the top of the market with this type of fiscal stimulus, because it would give a benefit to the economy. It would get a benefit to the market. People would have to have jobs, would be buying more steel, would be increasing our digital and our physical infrastructure. That makes a tremendous amount of sense as well. But I just don't believe that's going to happen, because I don't think the Democrats want to play ball with Trump and give him a win going into the 2020 election. And so it's sad that politics kind of plays a role here. But those are the two things that I really see really sustaining something long term. Now, in the short term, Tim, if we break out of that 29.45, 29.50 level, yeah, you could see some quick price appreciation into 3,000 and maybe even approach those all-time highs at 30.30. But until that happens, you have to have some degree of neutrality in the market. And I think we overreacted a little bit last week in our rankings in the scoreboard, T, coming into this Friday a week ago. Not the rankings from this week in the Tackle newsletter, but a week ago, we downgraded everything pretty aggressively because the market was just diving down 3%, just getting absolutely smoked, just really news-driven market that day. But then we found support at that 200-day moving average and started responding back up into resistance here. And so the rankings in the Tackle newsletter are going to reflect what we're seeing in the chart, not what we're seeing in the economy so much, but what we are seeing in the chart. And you're seeing just smack dab neutrality on this short term here, Tim. You got overhead resistance that you've tested multiple times. You have under support that's been tested 3 different times as well. And until it breaks out of this range, there is nothing really to be aggressive about. That doesn't mean we don't have good trades on the bull side and good trades on the bear side. It's just going to be a stock picker's market until we start to see the market break out one way or the other. The one thing that we talked about on the pod that does give me some degree of concern in this marketplace is if here, T, you got a great expansion coming into 2019 where you really kind of drive upwards of about 550 points up to the top side, retraces back down, forming a strong bullish retracement, inside candle, bullish engulfing type weekly candle, real good buy signal, broke out of resistance, but then slowed its momentum. And then you had this go from 27.30 up to 30.30, which is about a 300-point movement, retraces back down, and a deep retracement as well gives you a little bit of concern. So, and what I mean by that deep retracement, Tim, and I know, you're not the biggest fan of Fibonacci retracements, but when you look at this price movement here, just to kind of explain what a deep retracement is, you got a retracement right here that comes into the 38.2% range. That is one of those Goldilocks retracements that we've talked about in the past, where you retrace into the 38 to 50% zone, gives you a really good buying opportunity here. But then when you look at it from this current price movement going into that wave 3, you really kind of got that slowing momentum in the trend. But then you have this deep retracement on the Fibonacci coming all the way down to the 78.6 handle. And Tim, when I just see these things, and again, Fibonacci is not nearly as strong as it once was back in the day, but when I see these deep levels of retracement, it takes a lot to reclaim it just to get back up into those resistance zones. And a lot of times that forms some degree of reversal type patterns. I'm not ready to call the market reversal yet, just given the fact that we've had slowing momentum. But this is the first step in a market reversal, Tim, is slowing momentum and trend. The second step would be the double top, third step, double bottom, and then the fourth would be the break-in support. And if you project this out from a technical perspective, that's months and months and months from now. And so we're going to be interested in see what happens over the course of the next few months.
It's interesting when you talk about self-fulfilling prophecies, the way that they develop. I recently read that the word recession was searched by about 10 times more by the public on Google searches through the months of July and August than it had been for years, Matt. I see economic data turning over.
I don't think that's the economic data, though.
I think that's human beings, but could that lead to something?
No, I think that's because it's in the political type conversation now. Democrats are really trying to talk about that recession coming up. Even Lindsey Graham and Trump has talked about the pain coming up as well. So when it starts getting into the political news, people start looking for it. But I don't believe that's because they're feeling it in their everyday life yet. We saw consumer spending increase last week. We saw consumer confidence near all-time highs last week. So I don't think the consumers are Googling recession because they're a little nervous. I think consumers are Googling recession because they don't know what that word means.
Maybe. Not a high opinion of the public right there. Is that what I just heard?
I think that's exactly what you just heard, Jeff.
That's all right. Let's keep breaking down the indexes one at a time. S&P, Dow, and NASDAQ all feel very similar to me on the short term, Matt, neutral in a range, kind of stuck up here at the top. If you look at the daily charts on all of them, you're going to see those ranges. One notable stock on the NASDAQ today, Amazon, had some positive comments out of one of their analysts or whatever. It's actually up 1% while the rest of the markets are down. Give me a read on the rest of the indexes and finish with the Russell, if you will.
The rest of the index is doing very similar to what's happening running, well, the major indexes, the Dow, the NASDAQ, the S&P 500, you're looking at a very similar technical formation. The Dow showed a little bit more weakness than the S&P and the NASDAQ here, as you saw it test underneath that 200-day moving average. And then and the Dow, which is, you made a very good argument on the Dow yesterday in the podcast about how it probably is one of the sectors that has most risk to the trade war. And you're seeing that kind of today in the numbers, whereas the S&P 500, I mean, it's down, 20 points on the day, but it's really kind of held that doji. It just kind of gapped and just kind of held that doji. Versus on the Dow, you saw that it didn't. It opened up down and then continued to sell down. So you're seeing a little bit of weakness, and that's usually the case when we see this based on, the negativity we see from the trade war. And so the Dow's showing a little bit of relative weakness in comparison to the S&P 500 today. And then when you look at the NASDAQ here, very similar to what you're seeing in the S&P 500, gaps down and then just kind of holds that doji here. And so the NASDAQ and S&P showing a little bit of relative strength in comparison to the Dow, just given the fact that it didn't continue to sell off when the cash market opened. Now, when you're looking at the Russell 2000 here, the Russell 2000 is just kind of, it's not stuck in a range. It's got depressed resistance and it's got depressed support. You're creating a little bit of a bear flag type situation here where you have tremendous weakness on the downside at risk. And again, going back to this 1450, 1460 level, if that breaks, 1400's stone throw.
Mm-hmm. Some of the worst losers here today, when you got trade war news that is negative in red, Boeing, Caterpillar, Dow, 3M, Chevron, Apple Computer, Home Depot, a lot of companies that are sensitive to trade and also that kind of international type of stuff. The Russell showing weakness here. There's no doubt about it. But kick that back to a weekly chart. It's a question that we get all the time. What do I do if it breaks support? And for me, if you're a condors trader, make sure you have a plan in place now. If you have to react to it after it breaks below support and you don't know what you're going to do, then you haven't done your due diligence here today. And I'm not sure it will or will not break support, but I know for myself, I'll hedge. That's the way I approach it.
Well, that's the line. And let's talk about that, because cash flow condors is a wonderful system, that great cash flow, 90% probability, cash flowing 8 to 12%, average monthly returns. But those systems can get blown up through volatility. Would you agree?
Yeah, correct. Mm-hmm.
I mean, they can get blown up when you're doing, neutral range bound theta cash flow. Volatility is the risk there. And if that line is broken, I got that line really about 1440 here at the bottom of that wick. If that line is broken, you're staring at 1350 T. There's no support here at all until 1350. And we all know what happens when support gets broken. The market finds the next level of support. You're stepping down the stairs. And so once you step down those stairs and you break that support level, it's going to find that support level unless some type of news comes out. Now, obviously, news and politics and economics can change those projections. But when you take those out of the equation and you just look at it from a technical perspective, you have support right around 1350 and you have support around 1300. And so if you break support and you've sold credit spreads down here or down here at between 1350 and 1300, yeah, you might want to manage that. But Tim, how would you go about managing that?
Well, I have simple things I do. I'll add a contract or two, to hedge the delta on the long contracts I already own. So for example, if you have the 1250, 1240, and you've sold 10 contracts at 1250 and you own 10 contracts at 1240, you can buy more 1240s, even if they're 50 days out, add a little bit of delta, stay theta positive. So more advanced adjustments, Matt, but I just add delta. I add negative delta to get the delta back down to zero.
Yeah, you had put options.
Yeah.
Right. Yeah. Basically, you treat it like a swing trade, and you're buying a put option on IWM to offset the Russell 2000.
Sure, right? That's right. Yep.
Yeah. And by the way, if that happens, you're positive on the bear call side, so sell more bear calls.
Or even you can do that, or even buy back the ones if they've got profit. Sometimes when you break down like that, your bear call might be worth 10 cents or a nickel. Even
no, you would buy it back.
You'd buy those back and then roll them down.
Yeah, that's what I'm saying. You buy those back at 10 cents on the dollar and you reissue new contracts.
Yep.
I love that. So there's things you can do is the point.
100%. There's always something you can do in markets, which is why we have a daily routine, and your job is to go in there and do something about it to build profit and to hedge delta and to make sure you're executing your systems. Crude oil down here big today, Matt. Number one commodity we had to talk about, down 3%. Some real risk. There's no question about it. Matt, give me a read on the chart, if you will, first, and we'll talk about the news.
Yesterday, I was talking on the podcast about what we're seeing, and I was talking about this last week as well. What you're seeing here is, let me get my lines here, different lines. What you're seeing here, Tim, technically is you're seeing what's called a bearish triangle, symmetrical triangle type formation, where you have a longer term decrease in resistance and a shorter term increase in support. And that's getting threatened right now. And what I said on the podcast yesterday, I said, when you're dealing with a longer term downward movement in resistance and a shorter term increase in support, the projections and probability has to be to the downside. Even though it's just a slight edge, that's what it has to be, whether it's 55 or 52. I mean, you wait for it to break out of that. Now, I've been very clear on this halftime report that, many traders love trading symmetrical triangles. I do not. I'm just not a massive fan of symmetrical triangles, because when you think about the step system and you're trading breakouts, this is technically a breakout to the downside, and you have increasing volume. That is absolutely tradable to the downside, Tim. But then when I look left of the chart, just the way my mindset works, I look at this little support level at 53, and that's kind of where it kind of found its bottom here today. You see, into that 53 handle. Well, why did it come into 53? Because 53 played old support in this triangle as well. So when I look at these symmetrical triangles, that is technically a breakdown on increasing volume, but you have this support level, and then you have the 52 support level, and then you have the 51 support level. And so it just creates a really negative type trading environment, in my opinion, where it can just find those intraday support levels and just strong rally off those. I feel it's much better to do credit spreads in this environment. Sell a bear call spread against it if you're looking to trade that breakdown.
Yeah. Oil, for me, still neutral.
What was the news? Did you see the news on oil? I didn't see the news.
It's really just this trade concern, because when you're dealing with international economic concerns and manufacturing, oil gets hit hard in the trade war.
There's also the news out of Saudi Aramco.
Yeah, but I don't think that's going to affect the spot price of crude light out of the U.S. I mean, a little bit, maybe.
I think it's a mixture of the hurricane, Saudi Aramco, and the trade. I think it's all three of those, because the hurricane no longer hitting the tankers means that supply is going to stay high.
Correct. Well, a lot of projections don't even have that hurricane hitting landfall, but I mean, it's still going to cause massive devastation, but just through rain and storm surge. But I saw a lot of it just staying into the Atlantic. I mean, but did you guys see what the Bahamas? Oh my God.
They got destroyed.
Oh my God.
Some of those islands are just so low, like sea level wise, that when you get surges of
water that storm stayed there for like 2 days.
The
Bahamas, just so sad, just terribly sad. But you're absolutely right with that not coming into the Gulf of Mexico and threatening the tankers and the pipelines and whatnot. That's going to have an impact. I don't think Saudi Aramco has an impact yet.
Not yet. I mean, it's not even publicly listed. I mean, think about it. It will be the biggest company publicly traded in the world when it lists. And Matt, do you find it interesting that they want to list in Tokyo instead of London?
They don't trust the U.S.
I know they don't trust the U.S., but London, Hong Kong, I get it. Tokyo
that doesn't surprise me at all. That does not. I know it surprises a lot of people, but that does not surprise me at all. If you've been watching what China and Saudi Arabia has been doing over the last 5 years, that's not shocking, Tim. Yeah. I mean, Saudi Arabia is now selling China oil in non-US dollar transactions, which would have been unheard of 10, 15 years ago. Yeah. So, and by the way, if you ever threatened the petrodollar, we had a very, very strong response to you. Right. I remember when China and this is what age and veteran status brings. But I remember 1999 when China and Russia made a deal with Iraq to purchase oil from Iraq in non-US dollar transactions. And our response was very, very swift, very, very swift. We went to war. Right. That's what we did. Not with China and Russia. We don't do that. We fight proxy wars. But, now that's no longer the case. You have the U.S. as an energy independent. We're not buying, we don't buy as much Saudi Arabian oil as say China does. So that's not surprising to me that Aramco and Saudi Arabia is looking to list them in. I heard it was on the London Stock Exchange, the Shanghai Stock Exchange, the Hong Kong Stock Exchange. They're looking for bidders out there right now to see who's going to give them the best deal. But no, they're not going to the U.S. But I did not find that surprising.
Yeah, it's going to be an interesting IPO if and when it ever does happen. They're looking probably next year is what so you're going to have a lot of headlines on that. There's no doubt about it. Give me a look at RB.
Let me just tell Saudi Aramco one thing. Yep. Wait till after the recession.
Probably not a bad idea. Slash RB, if you will, here quick, Matt. Gasoline prices are down 55 cents a gallon since the top up there. I know we had contract settlement and all that kind of stuff, but they keep getting pummeled. Even after contract settlement, we're down another 4.5% today. When gas prices are dropping precipitously, that's a bad sign that from an economics perspective, that investors don't believe the consumer is going to be able to continue to pay. And then you also do have seasonal considerations. I agreed with some of Mark's points in the podcast yesterday, but I also think there are seasonal factors at play at times.
Well, the only point he was making is he doesn't believe in seasonality because he believes in charts, right?
You know what I think his actual point was? We always say the same thing, but we always talk, I think he's saying the same thing about seasonality that I say about Fibonacci's. It's not that it doesn't exist. It's not that you can't use it. It's that it drives us crazy when somebody points to that and says, this is the reason I'm making a decision. Right?
No, there's variables.
Yeah.
Right. And I believe the analogy he gave was, as a sports bettor, and he was a professional sports handicapper for many, many, many years, is that, when people say, well, this team has won 6 out of 7 at this event, and so that's why you have an edge. And it's like, well, they had a different quarterback. Right. They had a different offensive line coach. They had a different head coach. They had a different defensive coordinator, whatever the case was. And in seasonality, you see very similar things, Tim, where, there is some evidence of seasonality for many, many things. The Santa Claus rally, oil in, March and April and May. We see these things a lot, but there are variables that make every single situation in seasonality a little bit different. Mm-hmm. And so my point was with seasonality, yes, I think it's perfectly fine to use seasonality, but you can't just buy it and you can't just sell it. There's variables there, and you have to be able to read those variables. And a lot of that is done on charts. But when it comes to gasoline, Tim, I've seen this a lot where people's like, oh yeah, gas is going down. That's fantastic. No, that's a sign the economy is struggling. That's a sign that you might lose your job in 6 months. Okay. So in terms of this, gasoline, this is just the settlement on the futures contract, right? But this isn't. That is a violation of support, and that is a break of 150 on the support level on gasoline. And when you look at this on a 3-year weekly chart, you have a support level about 140 right here, Tim. The second support level would be right down here about 128. So keep an eye on gasoline. That break is significant.
Yeah, I agree with that. Natural gas, Matt, is up. We've been talking about this one, 3.25% here on the day. And I got to tell you, UNG looking more attractive. I still don't have a trade on it. Still haven't touched it. But now you've violated the trend line and the moving averages. And that one-day magic candle changes the whole chart.
It does.
Yeah.
It just does. And again, this is something we had a nice little discussion yesterday on it. This trend line was so significant, just absolutely so significant. And when you broke back up above that, and now you're back up above the 9, you're back up above the 20, you're back up above the 50-day moving average, at a minimum, don't you have to switch to neutrality here?
It's neutral in the short term for me. I'm looking for acquisition, entry points, and
kind of how I see this chart playing out and make sure we track this is I see it appreciating into this level of support, which is this level of resistance. You have a really strong horizontal level of support and resistance right there at about 2.46. Watch that hit that, retrace back down into that trend line. And at that point, you might have a bullish opportunity. And at that point, you might see natural gas for the first time in a year in the positive territory on the tackle commodities report.
Yeah, I'm excited about that one as we keep moving forward.
Let me just say one thing about this, okay? When you look at this October to December type scenarios, okay? And again, not to go on seasonality here, but I am seeing a little bit of evidence coming into the ending of the year where you had natural gas go from 250 all the way to 390, where you had natural gas coming into, November and December go from 260 all the way to 350. And then when we saw that one hedge fund blow up $280 million when natural gas went from 270 up to 490. And so, and I'm not saying it's going to happen again, but you do have some seasonality there coming into the fourth quarter, November and December specifically. And we're starting to see natural gas perform a little bit similar here. So keep an eye on natty gas.
What's amazing to me is that some traders and hedge fund managers and so-called experts, even the quants, the mathematics guys, they don't think they're being risky when they use excessive leverage on two deltas. but you can be just as risky with a 2 delta with a black swan event. We saw that last year. I made one of my mentor students last week sit down and watch that guy's video.
Yeah.
Just to teach him a lesson,
Listen, that's pain, but he deserves it.
Yeah, I get it.
Listen, I don't like calling other people out that do similar things that we do. I get it. Everybody's trying to go out there and help people out and help people from a financial perspective. But my God, when you're over leveraging yourself selling naked puts on natural gas, you deserve to get your ass handed to you.
Naked put, naked call.
Way too aggressive. That is way too aggressive. I was talking to one of my mentor students on yesterday as well, and we were working on naked puts and credit spreads in the futures market. And he's like, "Well, what delta should I be focusing on?" And I said, "If you sell over a 5 delta here, you're being way too aggressive."
Yeah, and I think the only lesson is because I sell 5 deltas. I like 2 deltas. I like high probability. Don't get me wrong, but even a 2 delta will be in the money 2% of the time. Okay. That's what the market is assessing probability.
Which, if you don't know how to manage that, Tim, can really the margin. It's not the risk of the loss. It's the margin exploding in value and the loss exploding in value. And psychologically, what you're looking at it, you still have 5 ATRs away from what you've sold, but you're like, oh my God, I'm staring at this, what could be a massive loss. And still you have 80% probability now of it ending out of the money, but you're seeing this margin go up and you're seeing the risk go up. You're like, oh my God, if I take that loss, I'm going to have a real big impact on my portfolio. And it's way too aggressive. And I even told him yesterday, Tim, I don't want you selling naked. I don't want you selling naked puts. I don't want you selling naked calls. Do the bull put spread, do the bear call spread.
I was just about to say that, Matt. I was going to say, when I started, I didn't start with naked on the futures market. I started with spreads. That way, it's a little bit easier to manage, and you can learn the market a little bit easier with spreads.
Well, that's because you're my mentor student too, Cody, and I don't let my students do stupid things. And so it's way too aggressive. Like, I've done a lot of naked puts on natural gas and crude oil over the years, but even I just feel so much more comfortable with credit spreads over naked.
And a comment in the chat here, Daniel, an advertisement just kicked me out of the broadcast. Daniel, if you truly are Batman, you can bypass those ads somehow, some way, and get back in here in the broadcast. Good. Cody, we'll talk about those ads and see.
The ads. There should not have been an ad mid-broadcast. If that's the case,
the only ad is at the first of the broadcast, but I even hate those.
C'est la vie. These kids these days.
I'm gonna buy you a YouTube Red. I promise you.
They don't remember that TV shows used to have ads on them. My kids went.
They're like, what's this ad? What's this ad?
I'm just messing with Daniel. I mentored Daniel, so we love Daniel. We'll look into it, Daniel. Matt, Palladium, Platinum.
Just to kind of explain those ads, we're running a test right now to see if ads allow us to get more visibility, and we're starting to actually see evidence that it does.
Yep. Which we will continue to use.
Google's algorithms. I mean, we got to work around their algorithms, guys.
Got to play the game
the way it's designed. That we're given.
That's right. Gold, silver, platinum, copper, and palladium, all good except for copper. Matt, give me a quick run through the metals, if you will.
Let's first talk about the dollar here, T. Dollar just is showing tremendous strength over the course of the last week. We upgraded into the positive 25 territory, threatening yet another breakout here on the dollar. Dollar's showing a lot of strength on the weekly chart as well as you're breaking out of that on the weekly chart. I fully expect the dollar to ting into the 100 range at some point over the next couple of weeks. So keep an eye on the dollar. It's just, and it's the best of the bad. That's what the dollar is. It's the best of the bad currencies. And when the rest of the world is burning economically and the rest of the world is focusing on lowering interest rates, very similar to what the U.S. is doing, give me the dollar over some of those other currencies, even at a 2% interest rate. Mm-hmm. So the dollar's breaking out here. But Tim, even though the dollar's breaking out, showing a little bit of positive strength, look at what's happening in gold here today, T. Gold showing strength yet again, kissing off that 20-day moving average. And like we've talked about many, many times,
Matt, gold, look at silver.
Silver.
Oh my God.
I'll pull up silver here in a second, young man. But in terms of gold, don't question the trend. Just keep on.
Before we get to silver, I did want to say for all of the Forex traders, guys who are learning out there, I talked about the euro dollar cross pair, and I just want to say, look for the reload. Hey, just look at that, guys. Those who are trading it, look for the reload.
I love that. And like we talked about yesterday, watch that high base form. It formed over the last 3 trading days and then an explosion. And guys, I just really hope that the team tackle has taken advantage of our analysis on gold and silver over the last 3-4 months and really over the course of the last year, Tim, because like I said last week when Wells Fargo came out and said, oh, be worried about gold at these elevated price levels. I said they'll say the same thing in 2 months when gold's sitting at, $1,600 and silver sitting at $20, and it's just not going to take that long. This is how many times do I have to say it? This is the beginning of something. This is not the ending of something.
Every damn day, because that is a beautiful chart. If you say that every day, it's just going to make me happy, Matt, because silver's been going up, 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 and it's going to continue to trend.
It's like Tim, it's like I told my student yesterday, we were looking at his swing trades over the last month, and he had some positive, had some negative, and I said, Nate, that's no different than me. Like my swing trades in the last month have been 50-50.
Well,
I've broken even on them basically. But what has really kind of lifted everything is silver and gold and the precious metals that we've been talking about.
You know what makes me really happy was I was on Zaner yesterday ordering some silver, and that makes me very happy today. knowing that those tubes of those coins are on their way and they're already worth more than I bought them for.
That makes me happy too, since they're one of our business partners.
You better have done it by clicking on the link at Tackle Trading, Cody.
I always go through Tackle Trading.
Thank you. We support our business partners through Tackle Trading.
Yeah, we got to get Pete Thomas back on a podcast talking about these metals markets going crazy.
Pete Thomas might be sitting on a beach right now celebrating. He might have retired at this point, just saying, I'm done. It's just that's what we've been seeing here in silver, and up 5% today. Oh Lord, just golf clap silver. Great job, silver.
Yeah. The dollar continues to stay bullish as the currency markets are weakening. By the way, the pound, some really, really interesting political developments in the last couple of months. UK politics might be more interesting than US politics, Matt. The way that they go back and forth in and out of Brexit and this and that, and the way the Labour Party is trying to push back on, I think it's the Labour Party pushing on Boris Johnson, if I got that right. I don't know what's going to happen. He wants to hard Brexit in October. And they are moving in that way. The Conservatives in the UK with Boris at the helm, they're moving in that way. The pound tried to break down. It's coming back here on a hammer candlestick. What's your read on that pound dollar cross pair?
It tried to break down out of this 120 level. And this 120 level is such an important level for this currency, Tim. When you're looking at this, and you can't see it, let me get you a little bit more time frame here, T. Let me get you 5 years of data. But look at this tremendous bearish downtrend as we were after, even before Brexit, the pound was starting to come down. But after Brexit, and Brexit's right here, pound just got absolutely slaughtered. And where did it come down into? It came down into right there, smack dab at 120. So for me, when you're looking at this 120 level, I'm not looking to trade this just with a test under 120. Give me a close under 120. Give me a close under that 120, and then you could take some type of short against the pound and buying the dollar. And so I'm not surprised that the 120 tested under and then came right back up, because the strength of that support level is so strong, and it's so important for the trade between the British and the US as well. And if it breaks out of that 120, I might be taking my wife to London for the first time in our lives.
You should go.
That'd be a good time to travel.
Yeah.
I got to tell you,
I'm going to wait till it goes to 110. When it goes to 110, I'm going.
Don't go in the winter. Go in the spring or the fall.
Well, that's how long it's going to take to get to 110.
There you go. There you go. You
don't think I'm projecting this out from a time perspective?
I like it.
Dude, do you not know me?
London in 2020 sounds amazing. I would support it.
Just don't tell my wife that I'm planning on just waiting for the pound to get a little cheap.
Well, hey, you got to be a savvy investor.
She'll just call me cheap.
Well, that's okay. And you should be cheap. There's nothing wrong with that. You should be aware of what the value of the things that you purchase are. There's no question about it.
Listen, people can call it cheap. I call it efficient. So
yeah. Bitcoin, Ether, all the cryptocurrency markets. The second I was concerned about Bitcoin the other day, now we're back up almost 10% in a single day here, Matt. It's not out of the woods. There's no doubt about it. It reminds me a lot of the markets we've been talking about, neutral in a range, but just more volatile with cryptos. Anything here grabbing your eye?
No.
I thought isn't it that they just launched the ETFs for Bitcoin? Is that what it was that's giving them the boost recently?
I did not see
I
that.
haven't seen that news.
I
you
saw
go.
They've been
something
trying
on
to,
it just briefly. I haven't read into it.
No,
They've been trying to launch that ETF for 5 years.
I don't think so.
They've
I
been
think,
denied, I believe, 4 times. That would be
yeah,
major news if that ETF does get approved.
unless there's something out there I have not seen, which I
I haven't seen it.
would shock me if I didn't see it. But
I
I'll look
honestly
into
think
it.
so.
I just thought I briefly saw a headline this morning, but let me check.
we've seen Bitcoin perform as a safe haven, right? Bitcoin is not a safe haven. This is the people that believe in Bitcoin acting as a safe haven, but Bitcoin is not a safe haven. It's going to be a short-term movement. Safety looks like gold. Safety looks like silver right now. You're not seeing safety here in this chart. You're seeing volatility.
Yep. Matt, on the first day of the week, each and every week, we run through the sectors. Give me a quick flash fire through them and let's talk about them. Obviously, financials and industrials under pressure here today, but give me the full analysis of everything.
Yeah, well, we always start with the ranking on the S&P 500, and as I said in earlier in the halftime report, I think we overreacted just a little bit to this volatility that we saw a week ago Friday, and so we gave it a little bit of an upgrade in the S&P, and don't take that as we're bullish. We gave it an upgrade to the 50-yard marker because we are straight neutral in this range until we see this range broken out of one way or the other. So the S&P 500 is ranked right there at the 50-yard mark, and we all know what we like to call a 50-yard mark rating. I wonder if the crew knows what we call a 50-yard mark, 50-yard ranking at this point. What do we call it, Tim?
It's the cowards rating.
The cowards ranking.
There's no doubt. Yeah.
It's the cowards ranking because we don't have an edge. You don't have an edge one way or the other in the market right now. You have bullish stocks, you have bearish stocks, but as a collective, we are just simply stuck in this range right here in neutrality from the top end of resistance to the bottom end of support. So let's take a quick peek at our aggressive sectors first. First sector we're going to look at is consumer discretionary XLY. XLY, we did have a slightly higher upgraded rating than the S&P 500. And the reason I'm seeing a little bit of an increase in support here versus what we did not see in the S&P 500. The S&P 500 came all the way back down, snapped back. It kissed off that 200-day moving average because the support levels were higher than the 200-day, because this little retracement we saw right here stayed above its previous levels at 114. We do have it rated at the 45-yard marker. And if it does ever break out of 120.5, Tim, that would obviously be pushed into the slightly bullish category, maybe a 30, maybe a 35 ranking, but we got to see that breakout one way or the other first. Communications, the next sector out there, a very popular sector to invest in. We gave this very similar to the S&P 500 because of the pivot relationships right there at the 50-yard marker as well. Looking at the next two sectors, the twins, I like to call them the twins because they like to perform very similar to one another often, not necessarily right now, but they do like to perform very similar to one another, very correlated, energy and basic materials. Energy, we have it at the negative 30-yard marker. We did upgrade it just a little bit because you're seeing a little bit of a low base type situation right here, maybe a descending triangle. Regardless if you have it as a low base or a descending triangle, there's no trade here until it breaks out of that 5570 area. So keep an eye on the 5570 area from a technical perspective. If you break out of this level, watch out for energy stocks, watch out for those Halliburtons and Exxon Mobils of the world. They should see some depressed price action coming out of that. So keep an eye on the energy sector because there could be some shorting opportunity this week. Looking at the basic material sector, what would this sector look like if it wasn't for silver and gold? I mean, it's just absolutely amazing. But for those of you who don't understand a lot about this sector doesn't just have your miners in it. It doesn't just have your gold and your silver and your copper. It has some of your energy stocks there as well, your drill baby drillers. And
even a small segment, Matt, the chemical companies have been destroyed.
Chemical companies too.
Yeah.
So it's really been offset because gold and silver is just a small portion of this sector. Like you said, you have the chemical stocks, you have your drill baby drillers, and they've been very, very, copper has been under tremendous amount of pressure. And so you have a slightly bearish trend as you can see these pivot relationships on resistance kind of going down, 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 and you're pressing up against that 200-day moving average. Material sector, not nearly as weak as the energy sector, but I do have it weaker than the market itself right there at a negative 40 mark. Keep an eye on 5590 on this sector. If it does break, once again, look at those chemical stocks, look at those copper stocks, look at those energy stocks that are the drill baby drillers of the world. Could be some shorting opportunity there. Offset that with some silver and some gold plays as well. Looking at your next aggressive sector in the industrial sector. Industrial sector is getting taken on the chin today because it has a lot of risk to China. We've talked about that tremendous amount in the halftime report. You've seen very similar to what's happening in the Dow Jones. And in the industrial sector, we have it as a negative 45. And it's just kind of stuck in that range, very similar to what's happening in the Dow Jones itself. And then finally, looking at your technology sector here, showing relative strength against the market. The technology sector has a positive 45-yard marker. If we ever do end up forming a bullish uptrend and we break out at 80-20, 80-25, 80-30 on this sector, keep an eye on this sector, because if we do break out, this has been stronger than the other indexes, and there should be some good bullish trades. And as you can see, you're seeing an increase in support here, horizontal resistance, increasing support. You got to have it on the positive side of the 50. We have it right there at 45. I think you could put it into the 40 range as well, expecting a breakout if we do see some type of market recovery here. So keep an eye on the technology sector if we do see a breakout. Looking at the defensive sectors, and the first defensive sectors we're going to look at are actually aggressive sectors. And Tim, I've said this for years and years and years. You've heard me say this more times than anybody. You've heard me just complain nonstop about how we categorize the financial and the healthcare sector. But Tim, in the last year, how often is the healthcare sector and the financial sector matching the aggressive sectors when we rank them?
Oh, they're trading with them for sure.
They trade identical to them. And so when you look at healthcare here, you're seeing a resistance that is falling down. You're seeing horizontal support. It's underperforming the broad market. And healthcare, very similar to base materials, has a negative 40 ranking. Looking at the financial sector here very quickly, all your bank stocks looks very similar to the Dow Jones. There's a lot of banks in the Dow Jones as well. In your financial sector, negative 45 ranking, very similar to what we're seeing in the Dow as well. Looking at your true defensive sectors. And here's how you know what a true defensive sector is, Tim. On a market day when it is down, consumer staples is up. And you're threatening another breakout on consumer staples. When the market is down, utilities is skyrocketing. Look at this utility sector. And how many times in the last 10 months have we said, get utilities in your portfolio?
Yeah, right? All the time.
Every single day. I feel like we're broken records sometimes.
And the REITs, yeah.
And look at the REITs. Another breakout on the REITs as well. So utilities performing really well today. Real estate performing really well today. Consumer staples relatively strong in comparison to the rest of the market. So you are seeing some opportunities in those defensive sectors. Keep an eye on those resistance. When you have a neutral market, Tim, the most important thing from a technical perspective is support and resistance. Keep an eye on support and resistance and trade those breakouts.
Mm-hmm. Very good job, Matt. Obviously, we're going to keep track of the markets day by day, but the sector breakdown, industry breakdown, economic calendar, that's a part of a weekly routine, Matt, which is why we do it the first day we ever come in for the halftime report and update the team out there. Guys, earnings season's not upon us, but there's always companies that are going to be having earnings. A couple of notable ones this week. You got Palo Alto Networks, Ciena, Zoom later in the week, company that we like, and DocuSign, those, so on and so forth. Always double check stocks with that. Got the coaches show tonight.
And I don't even have to look at those charts to say DocuSign and, the companies that you just listed.
Yep.
If you're an investor, you protect those.
Yeah, those are hedging type of stocks. There's no question about it.
Coca-Cola.
Heat map across the board is mixed. There's a few companies of note, by the way. Amazon actually had good positive guidance here, Matt. There's some stocks on the options report that are triggering here this morning. Antum, RL, UNH, UNP. I got to mention, and I want you to stall for 1 minute because I'm going to go get something. I'm going to show it to the team.
So does he want me just to filibuster?
I guess you're filibustering right now.
Is that what I'm doing?
You know what we can talk about right now? Let's go ahead and talk.
Cody, let's talk.
Exactly. We're on the same page, you and I.
How about you and I debate Donald Trump foreign policy?
That would take another 10, 15, 20 minutes. This show would go on for a
while. Cody, you started reading this book.
Yes, I did. Started reading Aftermath this week. I
am reading this book this week on my trip down to Atlanta. I'll be teaching for Legacy Education in Atlanta this week. And so that's going to be a good opportunity to start reading this book. But Cody, you've already broken the seal on it. What's your instant into? How far are you into it?
Probably about maybe a quarter to a third through it. Had plenty of time to on the plane this past weekend.
Back to Texas. That's
I
right.
went back to Texas, went home for a little bit, but
did you get a Whataburger?
I did get Whataburger. I got some Whataburger, got some
good.
Got some Buc-ee's.
Some true Texas barbecue.
Oh my God, yes.
Did you get to the brisket? You went with the brisket, right?
I got a brisket, egg, and cheese burrito for breakfast one day. Oh my God.
Okay, so what's your take on the book so far?
So far, what I've gone through, he does a fantastic job of breaking down the history. And I really like what he's doing in the book is he's talking about what we're seeing now and what we've seen historically, what's happening now and what led to what's happening now. So he's doing a very good job of talking about current markets, what's happened, what's different, and then backfilling. And he's doing it throughout the book, and he's doing a really good job of it. And I've also learned a lot about James himself. I didn't realize he worked for the CIA at one point. Yeah.
He's got an amazing history.
Absolutely.
He is a great author, and I don't agree with everything he says. Like just like everybody in life, you don't agree with everybody's policy on everything they have. But, I just love reading his writings because he's so historically dominant. And that to me is anybody who has seen me teach, they know how historically dominant I am. Right.
Yeah. And actually he talked about it. And I didn't realize that this being his fourth book, he meant to write these books in 4 concessions like this to mimic the 4 horsemen of the apocalypse. And he talks about this. This is the final one.
He's got a little doomsday in him.
This is the pale horse apocalypse. The horse. Yeah, it's a really good metaphor he talks about because you think about currency wars. Tim, what do you got there?
Tim, what do you got, buddy?
I don't know if I want to share all this negativity. We got to bring some positivity back.
What are you talking about negativity?
Bring your screen down.
Yeah, bring your screen down, Matt, so he can take the full camera.
Show the new Justice.
All right, team. This is my new dachshund. His name is Freddie.
There's a backstory here.
He's my new puppy. I turned 40 years old this month, and my wife bought him for my birthday. She knows how much I love dogs, and I've always wanted a dachshund. I have not owned one since my grandma did. There is a long backstory. We'll talk about it on the podcast. But
there's some differences of opinion on that dog.
I understand. I don't share them. I have my own opinions on it. There's no doubt about it. But I'll tell you one opinion is if you're around this dog for 5 minutes, you're going to like him. His temperament is great. He's a puppy. He's happy. He's excited. The only person who doesn't like him is my boxer. He does not like him yet. So.
Yeah, but your boxer doesn't like many things.
He's a dog. His name is Freddie Adi. Yeah, Freddie. There you go. He's my new trading partner. Look at him. I think we're even going to be the type of family that dresses him up for Halloween, Matt.
I'm so sorry.
Are you going to put the hot dog costume on him?
I don't understand what's going on right now.
Oh, just having fun. Oh, markets are down.
Mind you, I have 5 dogs, and I guarantee they'll be wearing outfits. So,
yeah,
sad day.
Must love dogs. All right, guys, we will be back tomorrow with the halftime report from Tackle Trading. Great job out there. If you're watching our show, always subscribe, like, and share it. And be a part of our community. Hashtag Team Tackle. Last comment right in the chat. Go pop it in there. We'll see you guys tomorrow. Ready.